All right, the Security and Exchange Board of India has ruled that online bond providers or OBPPs can only offer listed debt securities, government securities, listed sovereign gold bonds, and treasury bills on their platform. The framework for the providers means they need to register as stockbrokers in the debt segment of a stock exchange. So that will, so these are the guidelines. But then, what will these guidelines mean for online bond providers, and how will it affect you as an investor? Let's understand all of this and more with Aditi Mittal, co-founder, Director IndiaBonds. Aditi, good evening and welcome to the show. So first of all, let's understand or let's decode the kind of guidelines issued by SEBI. Obviously, it's in the interest of the investor to, get more transparency and securing the benefit of the investors. But as far as the online platform provider guidelines are concerned, what was it and what has been changed?
Thank you, Kavita, for having me on your show. I'm going to step back a bit. I'm going to say, how did this OBP guidelines came into picture? If we go back, bond market as an asset class has always been dominated and accessible to institutional space. It's way back in 2010, 2011, when government took the initiative of introducing tax-free bonds through public issue, that the non-institutional space or the retail investors started taking interest in the bonds. Come to 2019, 2020, we saw a lot of online platforms springing up and offering fixed income products, structured and packaged in various manners. And they exponentially grew from 2019 to 2022. In November 2022, SEBI came out with the OBP guidelines for the platforms who were offering corporate bonds listed or to be listed to be regulated. What these guidelines did, these guidelines brought in a framework for every platform to follow, whether it is in matter of how the bond will be settled in case if you're making a purchase, what are going to be the disclosure norms for a bond, various parameters that needs to be disclosed so that investors can make a more informed decision. In case if there's an investor grievance, then how and where should an investor reach out to? This brought in parity among all the bond platforms which are there and which are yet to come. So it was a very welcome move, keeping the investor interest and investor protection in mind, which is a primary interest of every regulator, including SEBI. Then now in June 2023, they brought in certain explanation on these circular, which was passed in November 2022. It said that apart from listed and to be listed bonds, we will be including government securities, treasury bills, sovereign gold bonds, state development loans, and municipal bonds. They can also be offered. And in case if you're offering any other product, that means if you're taking your client or your user to another platform, then that platform should show only the asset class which are regulated by some financial regulator like an PFRDA or an RBI or an IRDA, so that all retail investors have an understanding that the asset class they are choosing, it is regulated by some regulator or the other. So that is the two differences that came in earlier circular and this circular.
Right. So let's just break this down, because what I also feel is people don't have awareness of these kind of online platforms. Okay, the fact that SEBI has come with a new set of guidelines for this, there's a lot of buzz about it, but a common investor wants to know exactly what's being sold on these platforms, because there's no doubt about it that there's a good set or good number of investors who really like risk-free investment instruments, or they want their capital to be safe. That can also be the priority for an investor. But what kind of options or investment or financial products do these online platforms offer?
So I'm going to break your question in two parts. First, you spoke about the education and accessibility. Because for an investor to invest in any asset class, he has to understand what is his goal and what is his risk appetite. For that, he needs to understand the asset class. For that, there is an immense amount of investor education in this space, which is being conducted by various OBPs in collaboration with exchanges, that is NSE and BSE, through webinars. So I would encourage retail investors to attend them, understand a bond, understand government securities, make themselves aware that what are the risks associated and the returns associated with it. Once they're done with it, they can go and explore all these offerings on any OBP platform. First thing they should check on a platform is whether it is registered or not registered. If it is not registered, then it is not governed by SEBI. And to ensure that it is registered, you can please
So
check
that
the
is the main
registration
question.
number.
So that is the main question, Aditi. How do you know that this particular platform with which we are dealing or interacting with right now is registered? Because as a layman, an investor might not have those expertise to identify. So how can they verify?
Absolutely, yes, Kavita. It's a very valid question. On every platform, they need to disclose, every OBP needs to disclose their registration number at the bottom of the platform or in somewhere on the web page. So please look out for that registration number. To reconfirm the registration number, you can go on the SEBI website also. There also it is disclosed that which stockbroker is registered as an OBP platform and they're running a valid registered platform. That could be the way of validating that you are in right hands. Second thing is when you are choosing an asset, when you should evaluate your own risk appetite. Just like in any other asset class, here also in bonds, you have bonds available of various risks, starting depending on its credit rating, starting from a AAA to a BBB, which is considered as an investment grade. Depending upon what your investment goal is and how you want to diversify, please choose a bond. Once you choose a bond, do the due diligence. Read the offer document very carefully. Understand the parameters of a bond. Bond is not as simple, though I don't want to sound and make it sound complicated, but once you understand, it'll be very simple. Know the issuer, read the offer document, know the rating, see the tenure, and see the return that you are getting. For that, please learn how to price a bond also. So that is also made accessible by a lot of OBPs, including IndiaBonds, to learn how to price a bond. So these will be the three pillars which I would recommend that every investor should keep in mind while they're considering bond as an asset class to invest in.
How do we ensure that the products that are being sold on a particular online platform are genuine? Because a lot of times, you know how these people, play that mischief and sell bundled product to an investor. Investor awareness education is needed from their own level, at their own level. But then how do you ensure that what's being sold to you is genuine and it is not leading to any other kind of transaction which can be bundled up with this particular purchase or a investment that you're doing right now?
Very interesting question, Kavita. First of all, when you're choosing a corporate bond, you should see it should be listed because every listed corporate bonds is governed by listing guidelines of SEBI. This means an issuer which issues a bond and lists on various stock exchanges will have to make regular disclosures as per the regulations, and this will keep the investor informed during the journey of the bond. Second thing to keep in mind is when you're buying this bond, ensure that the settlement is through the exchanges. How do you do that? Where you choose a bond, and when you make the investment and you're transferring the money, see who is the beneficiary account holder to whom you're making the payment. It should be either of the clearing corporations. Either it should be ICCL, which is governed by BSC, or NCL, which is governed by NSC. Money should go straight to the beneficiary account from your account. Once the deal is settled, the bond should travel from the clearing corporation directly into your demat account. That's why when you'll be buying a bond, they will be asking your bank details and demat details, which will enable the clearing corporation to receive the money from you and credit the bond to you. In case if you come across any platform or any structures whereby they're asking you to make payment or give your bonds in any third-party account or in an OBP account or anywhere else apart from the clearing corporation, it's a red sign. You should double check the product because as per OBP circular, all the settlements should be done by the exchanges directly. Bonds should not be bundled up with any other product. In fact, as per the regulation, an OBP platform should disinvest from showing any other product apart from the listed and to be listed corporate bonds and other assets and other GSECs, SDLs, SGBs, and T-bills. They should not be idly showing any other product. I hope, Kavita, that answers the question.
Yes, it does. So my next question to you is, so government securities and sovereign gold bonds are also available on these online platforms, okay? Talking about the bouquet of offering that generally a platform has, how enhanced does it get with these two additions? And how can an investor sort of align these investments with their portfolio and with their financial goals?
Government securities is the mother instrument of corporate market. This is an instrument which is issued by RBI, and it is highly safe, and it is highest rating. When OBPs were only showing the corporate bonds, it was not fair that they were not allowed to show your G-Secs or T-bills. Treasury bills are again an instrument which is issued by RBI, which is less than 1 year instrument. And state development loans are the loans which are borrowed by the state. This enhanced and offered more variety to investors depending upon the risk appetite. If you want absolute safety, your objective is that I'm not very concerned about the yield, but I would want an absolute safety. We would say go for a GSEC, go for a AAA corporate bond, but please do your due diligence. However, if you're looking for a higher yielding bond, you can go down the rating curve and you can choose another bond. But while you do any investment, please read the offer document and do your diligence. End of the day, buyer beware. So that's how it has added to the variety and the options to the investors while they're making a choice.
That will be all, and we've discussed this topic in depth. Thank you so much, Aditi, being on the show and helping our viewers as to how to go about with this online bond platform provider.